This is introduction class for the financial management. After onwards, we'll elaborate each and every concept of financial management. In financial management is the activity which concern with the planning and controlling the financial resources. And using the financial resources, manager always tries to maximize the return of investment with minimizing the risks. Till 1900, 1890, there is not such discipline like financial management. It's always a part of economics. As of now, it is a separate discipline, but still is in developing stage. Before going to the financial management, we have to discuss about the real and financial asset. In real asset, all the tangible real asset and intangible real asset. Tangible real asset, plant and machinery, and all the assets the company have to smooth functioning of the company. And the intangible real asset are the technical know-how, how to operate new technology or special technology, copyright or other intellectual property right, and also the collaboration to develop new product or capture new market, etc. In financial asset, we considering the securities, bonds, and share. What is a financial function? The function is raising fund, invest them in an asset. Asset means in your real asset or in your financial asset, and distributing return earned from the asset to shareholders are together known as your financial function. All four are your financial function, that are investment decision, financing decision, dividend decision, and liquidity decision. In investment decision, the firm's decision involves the capital expenditure, so it's all otherwise known as your capital budgeting decision. In investment decision, there are two important aspects. One is your evaluation of prospective profitability of a new investment and measurement of a cutoff rate against that the new investment can be compared. Let's say you have two investments, investment A and investment B, with same risks and different rate of return. If you are considering the first aspect, your profitability, you have to choose which investment policy, plan A or B, having the maximum profitability. By increasing your profitability, it also increase your risks. And second aspect, we have to choose a cutoff rate. That means if another investment policy having C with same risks, we set C as your benchmark and comparing the each and every investment strategy which one have the highest potential of rate of return. In financial decision, mainly decide the optimum capital structure. That means appropriate portion of equity and debt. The absence of debt on the return of equity on share increases, also increase the risk of investment. If you have decreased your debt, the company have higher earning per share. But if you increase your debt, your earning per share will be decreases. But if debt and equity, the ratio of debt and equity depends upon your return of investment on the asset or the financial asset, real asset or financial asset, what you have invested. The change, the change in return caused by change in profit is called as your financial leverage. Dividend decision. In dividend decision, manager have to decide how much percent of profit should be distributed among whom, among the shareholder, and how much return for the future investment. That is your retention ratio. Managers have to set a optimum dividend policy to maximize the market value of the firm. If company going to their maximum dividend, then the market value will may increase but in the short run, but in the long run, company have insufficient of fund to invest in the future. The manager have to decide the optimum dividend policy, how much money should be distributed and how much money should be retained for the future investment. Liquidity decision involves the current asset management. Current asset, as if you know, your raw material and any asset that is consumable within 1 year. Safeguard the firm's the volatility in short term. Lack of liquidity of the firm leads to insolvency. Liquidity of a firm depends upon the goods and services produced by the organization. If the organization producing a product like your aeronautical product or any railway product that will consume a long duration to make a raw material to a finished product which will be consumable. That in this form you will need a higher amount of liquidity fund or any FMCG product you are going to have you should have a less liquidity fund to operate your business. This all about your financial management decision. Thank you for watching.